We're back at it again, Daniel, with another weekly stock market update.
As we always do, we're going to be diving into the main news of last week to get a better understanding and really develop a stronger framework for an idea of what might be coming this upcoming week, where of course I'm going to be breaking down all the major things you should be paying attention to. Now, for those of you who don't have the time to watch this entire video, let me from the onset give you the TLDR. This upcoming week is going to be a pivotal one. Not only did we get a lot of major news last week, this upcoming week we're going to be getting even more, especially as it relates to monetary policy. And we just got out of the monthly options OPEX, which means there's going to be a big pivot of money. So let me be honest, no one has a model that can 100% guarantee you will the upcoming week be bullish, bearish, or neutral. But what I can tell you is a lot of decisions need to be made. So if we can identify what that trend's going to be early on, most likely we're going to be able to ride it for quite a bit of money. So really the TLDR of this is pay attention this upcoming week, because a good trend will most likely be established, but these are all the things we're going to have to pay attention to better understand what that trend might be. Well, before we get to that, don't forget to like, subscribe. If you really want to help me out with the algorithm, don't forget to leave a comment. And with that being said, let's rock. So when the market closed on Friday, not only did it signify that we were halfway through the month, but we also had the monthly OPEX, as in we got an idea of the large players and what they wanted to do with their old positions, rolling into new positions. And in reality, even though the day itself wasn't that exciting, we did hit a new all-time high. S&P 500 closes lower on Friday, but logs its second weekly gain. So the overall market, the S&P 500, as I alluded to on Friday, hit a new all-time high. And it also means on the week about 1%, just below 1%. Same thing on the NASDAQ, putting in a nice gain on the week, about 0.4%, and on Wednesday hitting a new all-time high. And even though it's not in the world of equities, Bitcoin also had a pretty interesting week, halfway through the week hitting a new all-time high. People are saying, is it a fake out breakout? I don't know. Your guess is as good as mine. All I could tell you is it's right now, as I'm filming this in real time, hanging out at this key technical level, this downsloping trend line. And just for that same time period, I guess just to be consistent from Friday to Friday, basically break even. Am I even on the right bar there? Friday, gain of about 0.6% in that same time period. But once again, the key thing you need to know is S&P 500, NASDAQ, and Bitcoin in the past week, heading into halfway through August, clocking new all-time highs. And for this upcoming week, the question is going to be, are we getting this follow through? Are we going to have some profit taking? Or is it going to kind of be a bust of a post OPEX week where we end up doing a bunch of nothing? Well, this is the framework or how it played out. But in terms of what the big guys did throughout the week, that's this teal line here. On Monday, they were slight sellers. Tuesday and Wednesday, clearly net buyers. Thursday, slight net sellers. And then on Friday, it looks as if they took an early lunch. So with respect to price action, this is how things played out. But under the hood, we have a little bit more info. This is with respect to the large players. On Monday, you can see that they were small, slight sellers. Tuesday and Wednesday, net buyers. Thursday, once again, small, slight sellers. And then on Friday, it looks as if they took an early weekend because they did absolutely nothing. So once again, that's the structuring of the large players. And that kind of gives us the idea that not too much exciting happened, but midweek, they were clearly a little bit more bullish. But it's not like one of those situations where they were always buying every single day or always selling. So I would say slight edge to the bulls. So now that we're all on the same page of what just played out, obviously the golden question is, what should we be looking towards in this upcoming week? So let's kick this off with seasonality. As many of you watching these weekly videos know, August is seasonally a choppy month. Sometimes it's bullish, sometimes it's bearish, sometimes it's absolutely nothing. But historically, over the past 20 years, it ends up being a whole bunch of nada. Over the past 5 years, you can see on the monthly that it's actually bullish, but if you switch it to 3 years, it's actually bearish. Same thing on the weekly. This upcoming week on the 5 years, as in the average performance over the past 5 years, slightly bullish, but if you switch it to the past 3 years, it's actually slightly bearish. So that tells you on a seasonal perspective, this portion of the year is not seasonally strong or weak. It just kind of averages out to being nothing. So maybe it's just not going to be that much of a weight in your decision to either be long, short, or basically doing nothing. So if seasonality isn't really going to be giving us any insights, maybe let's take a look at the positioning of the large players. Shout out to Spot Gamma, but right here, you can see a lot of positive gamma over on the left side right here. And then also on the right side, you can see that the option chain, a lot of positive gamma, as in kind of sticky price action, not necessarily bullish or bearish, but a lot of sold calls, a lot of sold puts, kind of keeping price action pretty stagnant. Obviously, this is dynamic and it can change on a moment's notice, but that's how it is as of this weekend. And then we do have another tool here where I would say kind of stagnant, sticky price action, but every single day of this upcoming week, there are more calls in play than there are puts. So that tells me it's kind of supportive price action, as in if there is a bit of a sell-off, I would expect that dip to be bought. Once again, I cannot stress this enough, but the entire situation is dynamic because certain updates might get people to buy a lot or sell a lot. You never know what's coming down the pipeline. And this upcoming week, as you're about to tell, there's a lot coming down said pipeline. So on Wednesday, we're getting the FOMC meeting minutes, and then we're getting some of the PMI numbers on Thursday. And then on Friday, you're going to notice something a little bit interesting. Fed Chair Powell speaks at 10 a.m. I looked into that, and then I realized that a lot of the voting FOMC members, a lot of talks throughout the week. So Tuesday, Wednesday, Thursday, Friday, pretty much every single day of this week, we're going to have a Fed member speaking, and that's really what's going to be moving the market this upcoming week. What in the world is going on with monetary policy? What in the world's going on with the Fed fund rate? The September meeting, an entire month out, the market has no idea what to bet here. At certain points last week, it was guaranteed that we're getting into 25 bips rate cut, which is currently at the odds of 92%. And then there was even a chance of a 50 bips rate cut. And just between all the reports, we're just ping-ponging back and forth. As of right now, 92 and then an 8% chance that we stay where we are. But like I said, this has just been a crazy EKG back and forth. And that's all because of inflation. So on Tuesday of last week, we got a lower than expected inflation report for the CPI, the Consumer Price Index. It was cool. Came in lower than expected. That was really good. And that's when we saw the chances of maybe even 100 bips rate cut by the end of this particular year. Then fast forward to Thursday of last week, and we got a hotter than expected PPI report. But it wasn't just a little bit hotter, it was a lot hotter. And as you can see, it made Jerome Powell say, I absolutely hate my job. This is gonna be a mess. So this is why this upcoming week is gonna be important, because everyone's like, what is going on with inflation? We're cool, we're hot, we don't know what's going on. The Fed fund rate odds of cutting, raising, staying constant, they're all over the place. That's exactly why every single day the market's gonna be tuning into what these voting FOMC members have to say, because we're trying to discern what in the world is going on with monetary policy. And just when you thought that was enough, don't forget we're still technically in earnings season this week and next week. Granted, things are slowing down. You might want to be paying attention to Palo Alto Networks on Monday after the market closed. Tuesday, Home Depot, that's always an important one. Wednesday, Target, TJ Maxx, you might be watching those. And then on Thursday, Walmart and Zoom are both pretty big. And then next week, that's when we're going to get the biggest stock in the world. I'm talking about Nvidia. So basically, we have drama related to the overall market and monetary policy. We have ongoing earnings drama with individual equities, but don't forget, there's always drama on the large global scale. US and Russia agreed on Ukraine security pledges, according to Witkoff. So we've been talking about this basically for an entire week, where this particular meeting of President Trump and President Putin in Alaska had the capabilities of being very good, very bad. It's just related to the unknown things, the uncertainties of global tensions. Of course, it could have gone in the way where it made it very, very bad. But right now, I'm obviously filming this after it already happened. It seems like as good as it could have gone, it did go that way. So if anything, I would say that this is a benefit, maybe another feather in the cap of the bull camp. But you should also know Ukraine and allies left scrambling as Trump shifts towards Putin after Alaska summit. So this is going to be a little bit dramatic, and that's always what headlines are. But really, we know that there's now going to be a sit-down meeting between President Trump, Zelensky, and other European leaders. So it seems slowly but surely we're kind of dragging everyone across the finish line to ideally end this global conflict. So even though this doesn't directly relate to markets, obviously on a secondary and tertiary level, it's probably a narrative we should be paying attention to. So all in all, we're at very interesting crossroads. Last week, we hit new all-time highs, and then things started to calm down as we officially got into OPEX, which means a lot of big money is going to move because they literally expired. Like the contracts ended last week, and now those big money players have to make a decision. Do they want to continue and roll it into being bullish, or is it time to actually be bearish and be a little bit more aggressive, or is it just going to be a neutral nothing week, and we have to kind of awkwardly wait and ideally take our hands away from the market to not get burned by theta, which actually brings me to what I have in my positions right now, my swing positions. I'm absolutely flat. Remember how we know not every day of the week is built the same? I would actually argue that not every week of the month is built the same, and the week out of OPEX is commonly just a bunch of nothing, as everyone's like awkwardly looking around saying,
hey, what are you going to do? Are we going to be bullish? Are we going to be bearish?
it takes a little bit of time to almost reload with respect to volatility coming out of an OPEX. So of course, if I see an opportunity, I'm going to take advantage of it, but I close all my positions out on Friday because it was in fact OPEX. I wanted to see how things played out over the weekend, obviously with Putin and Trump, obviously with Zelensky, but also we just know there's going to be a lot of shifts with monetary policy, or at least perceived shifts. So I think it's easier, at least for me in my own sanity, to take a step back and say, all right, I want to see how the dust settles, which is exactly why right now my swing positions are 100% flat. And as I make updates to them, of course, I'll let you guys know. But I must say, going into last week and really throughout the week, the bulls were clearly in control. Price structure, price momentum, and really the option setup all favored the bulls. And this upcoming week, obviously it could easily continue, but this is going to be a giant question mark because we're just in a weird pivot period. I can't sit here and earnestly tell you it has to be bullish, or no, it's going to switch and it's going to be bearish. No, I'm going to be one of the few voices telling you guys that you have to admit what you don't know. And if anything, I would argue this is a period to sit back, sit on your hands, and wait for those trends to develop. Because in reality, as an active trader, do you really care if the trend is bullish or bearish? You just want to ride the trend as long as you can, get the meat of the move, lock in your gains, and then move on to the next one. And right now, we're just in that kind of like awkward, will he, won't he type of a period where we just have to calm down, sit back, relax, and wait for that perfect opportunity. Of course, these are my own thoughts and opinions, and you might have a completely different thought and opinion. And if you do, hey, I hope you make money, but I just want to be transparent about my personal views on the situation. Of course, if you have any questions, comments, or concerns, let me know in a comment below. I'll be getting back to all of you. That's what I have for you now. I'll catch you in the next one. I appreciate the good vibes.
Peace.